Hi everybody, welcome back to the channel. Today we're talking about Vale S.A. This is a company that is trading down from where, as you can see, over $15 a share near the beginning of 2024, and we've come down to under $10 per share. This is a company that has a $42 billion market cap. This is also a very large mining company. So that's the first thing to understand about this Dividend stock, is that it is a large mining company engaged in metals and mining, and one of the largest logistics operators in Brazil, one of the largest producers of iron ore and nickel in the world. Now, what we've seen in the last few days, which I think is a short-term trend, I think long-term, we are going to see a push in metals, precious metals like copper as well. That's something else that this company does in fact mine. So copper, as you can see there. Iron ore and nickel, though, those are the two most common types of minerals that this company is going after. So basically what we're looking at with minerals in general and precious metals, you can ask anybody out there, and see what they say. Personally, I think that precious metals, minerals, all of these resources, they're in short supply. With inflation and currency devaluation long term, you should see these assets tend to do pretty well. And so if you're looking at this from that perspective, you can kind of say, well, then what companies might do well? First of all, this company, Vale, is paying a 14+% dividend currently, or right around a 14% dividend, depending on the exact share price. But this is also based upon, these dividends here. You can see that this company is paying out, it looks like, every 3 months. So September, December, March, and then actually maybe twice a year. So maybe I'm wrong there. So it looks like they paid out in March. They paid out in September. Maybe they'll pay out in December. We'll see what happens here. But as of right now, this dividend is 14% is what we're getting. So you can see there's a lot of variability with these dividends too. So you're not going to have like the same fixed dividend. So some companies will try to have the same dividend payout and then try to increase that payout. This is going to be more of a variable type of dividend. But as you can see, if you look at the trend on these dividends, if you look at back in 2017, they were paying a lot less in terms of what they're paying now. So these dividend payouts have definitely gone up. Now, if you look back at where this company was trading at back then, this chart goes back a long time, so you can kind of look back even to 2002, and we're definitely on the lower end of the trend. You can see how we got up to almost, I guess, $50 a share, $40 a share back in 2008 before taking a big dive. And then after the 2008 financial crisis was over, we kind of went back into a bull run as precious metals prices did well during that time period. So if you go back, which at this point is well over 15 years ago, hard to believe, but I remember back when I was in middle school and, the stock market was crashing back in 2008. But then out of that, you also had metals that did very well in 2010, 2011. Gold prices doubled, and so that's kind of what you might see as well. Especially, it just depends on the economic cycle. But if we do enter into any kind of economic downturn in the future, often what can happen on the back end of that is that precious metals can in fact do pretty well, depending on the specific monetary policies and a lot of other factors that are put out there. So this is definitely a long-term play, in my opinion. This is not like something you would just buy and try to flip or something, try to get a quick dividend out of it, especially when you're talking a 14% yield. Obviously, this is going to vary, but if you look back at the most recent, the total dividends paid out this year, you can see here, if we just take this 55-cent dividend and then add that on top of the, I guess it would be the 36-cent or 37-cent dividend, then we're talking a pretty good amount of dividends here. So let's take a look. 92 cents thus far. Now, assuming that's all they pay out, let's say they don't pay out any other dividends this year, then you can actually get, I guess, a better feel for what kind of yield you'll expect for 2024 as a whole. We know the price is about $10 a share, and so if we even figure the price is $9.97, we can just take $9.97, and so we're talking basically at that point a 9.2% yield. So 9.2%, maybe not quite 14% as we're seeing right here on the tape, but of course this is going to fluctuate. So still 9% on your money there. I know a lot of people, the frustration with some dividend stocks they'll say, well, the dividend's only 2%, it's only 3%. I want more of a yield. So there's a lot of trade-offs sometimes with dividend stocks. I mean, sometimes you might have a lower yield, but also with that lower yield might come the potential for a lot, higher dividend growth. And so in the long term, you might actually benefit from that more than just getting that higher initial yield starting out. So there's a lot of factors to consider here. But nonetheless, if we look at the financials for this company, now, first of all, this is in millions. So this is not 41 million. This is actually 41 going on almost $42 billion in revenue back in 2023. So this is not a joke of a company. 42 billion in revenue is a pretty good amount. We have a market cap. I think it was right now we're sitting at a $42 billion market cap. So roughly a 1-to-1 price to sales ratio, I would say, in terms of their revenue versus their market cap, 1-to-1. I mean, you could argue that's undervalued depending on how much growth you think the company has. That's one metric you can look at. Gross profit, I really want to see what their net profit is. Okay, so 7.9, and this would actually be $7.9 billion. And so this is definitely going to be a high, profitable company based upon if you look at their revenue, you can kind of see what their margin is right now for 2023. And of course, when 2024 comes out, we can compare this to those numbers. And so, and by the way, this stock recommendation came from a YouTuber. I forgot to mention this in the beginning of the video. I do apologize. This actually came from somebody in the comments, so thank you. I forget your username, but I do believe you mentioned this and you brought this up, and I thought I'd make a video on it. So thank you so much for bringing up this stock. But yeah, so we have 41 billion in revenue versus what we have in terms of, I guess, their total net profitability. So definitely a profitable company here. And if we look at the actual margin that they're generating, we can see that they're doing about a 19% profit margin. So, 19% on your net profit, net income, not bad. Not bad in my opinion. And you see that they have all these expenses, including income tax. Everything is already included in terms of what they have to deduct. And so they have their research and development expenses coming in at 723 million. All of the other stuff, 1.9 billion, nonetheless. Earnings per share, $1.83. So $1.83 EPS. Then you can start looking at the, price to earnings ratio and think to yourself, well, could this be undervalued? You have an EPS of $1.83, okay? So earnings per share, $9.97 is the share price. What kind of multiple are we placing on this stock then, right? So what kind of multiple are we really looking at in terms of, a 5% price to earnings ratio? So you're basically paying 5 times the earnings. But then the question becomes what does the future growth look like? Because you have a share price that is down from 15. The valuation was obviously a lot higher when you have, I think it's over 4 billion shares outstanding with this company right now. So over 4 billion shares outstanding, if you take that times $15 a share, it's going to be definitely more than a $42 billion market cap, probably more like a $60, $70 billion market cap when it was trading at these higher levels. And so the valuation has definitely come down, okay, from let's say 60 billion down to 40 billion. And so 1-to-1 price to sales ratio, price to earnings ratio of roughly 5, let's call it, and a nice dividend as well. And so depending on where you're getting your data from, you might see a dividend yield that's lower over here. The trailing 12 months is 8.83%, estimating of 9.91% yield. PE, right? So this is going to be a little bit different than what we calculated as well, 4.60, but pretty close to the 5 number that we discussed. The forward price to earnings ratio, that is coming in at a 5. So the forward PE, hey, that's looking pretty good. We have the price to sales ratio, as we were discussing, about a 1-to-1 ratio. So there's a lot of metrics here that I think could look pretty good in my opinion if you're looking at this from an investment perspective, especially with the valuation that's come down. And you're getting that nice dividend. You really are. And so anyway, I just wanted to make this video. By the way, this company has, it looks like 66, almost 67,000 employees. So definitely one to check out here, guys, if you're interested in mining stocks that pay dividends. I made another video on 5 other mining stocks out there that do pay dividends as well. But this is another one. So check it out if you're interested, guys. Thank you so much for tuning in as always. God bless you all, and we'll see you in the next video. Take care.